Hey everyone, this is Kirk here again at optionalpha.com. Welcome back to the Trading Alerts recap video. Again, what we do here each day is update everyone with the trades that we made for the day as far as opening and closing or adjusting trades. Again, this is only for members live. If you're seeing this on YouTube, we post this video about 5 days after we send this to members, so you're getting this late, and at which point you can't take advantage of it until you sign up for a membership at optionalpha.com. So what we're going to do is go over the opening trades and then talk about our closing trades. It was a pretty even day. As we start getting closer to December expiration, which is tomorrow, we are starting to exit some of the positions that we currently have, some at a loss, some at a profit, etc. So we'll be a lot more active tomorrow with managing some of the current positions that we have on expiration day. And tomorrow night we'll go over some of the trades that expired worthless. We have quite a few trades that are going to expire completely profitable and worthless, which is always good to have here near the holidays. So let's talk about some of the opening trades that we had today. The first is the vertical spread on DOW. Now, we already have some positions in DOW, and we're just adding to it. And this is the beauty of trading small to begin with, is that you have this ability that the market continues to move in a favorable direction, or implied volatility continues to go higher, which is the case with DOW right now. And we're adding to this position, just making it even better. The premium in here is really great, and we'll go to the chart here and you can see why. But we sold the 43.42 put spread for 33 cents. Usually we like to take in a credit of around 30 cents on a $1 wide put spread. So this is that $1 wide put spread, and we took in 33 cents per spread. So it's actually really, really strong credit for this trade. If we go to the actual chart of the Dow, not the Dow, but Dow Chemical here, you can see why we've been so active in here is because Dow's just been running crazy to the high side. And more importantly, is this implied volatility level up in the top left-hand corner. It's at the 96th percentile, which means that it really hasn't been this high for a very, very long time. So we're taking advantage of it. Again, our position is right here below the market, the 43.42, took in some good premiums. So we have a position above and below, and so we're just kind of adding to that and bolstering that position in DOW. The next, these two trades, both Walmart and SPY, I'm going to go over together here real quick, but Walmart and SPY really were just two delta positive trades that we wanted to get on. The SPY, though, I don't think that the market may continue higher. I really kind of think it still looks a little bit toppy to on my favoring. But I do think that we needed to add some more positive delta to the portfolio. What we're always trying to do is neutralize the effects of a big move in one direction or another. So as we continue to take trades off on this recent correction that we had last week and the week before, we're starting to take some of those profitable delta negative trades off. So trades that are taking advantage of the market going lower. And we need to start bolstering our position in some positive delta. In case the market does go higher, we have an opportunity to take profits. So this SPY trade is purely that. It's a $3 wide call spread, the 180, 183. And we bought it for around the midpoint, so it's about a 50-50 trade. We want the SPY to close somewhere around 181.5 or higher. That's really where we want SPY to go. Again, not to say that we think it's super bearish or bullish in the market. We just want to add some of that positive delta to the portfolio. Walmart, a little bit different story. Walmart's actually been really kind of crushed here recently. So although it is adding some of that more positive delta, so giving us a couple more longs in our portfolio, the 75.80 call spread, which is a fairly wide call spread, we got in for around 260, which is right over the midpoint. And when I go to the chart of Walmart here, you can see why we started to go in the positive direction here as far as a bullish trade. Again, you could have easily done a put spread or a call spread. In this case, because Walmart has been trading so much lower through December here, we think we're going to take advantage of possibly a little move higher here in Walmart. So that's what we're looking for, is Walmart to make a little move higher here before January expiration as we start heading into the new year. All right, so let's go over some of the closing trades that we had here today. The first one that we closed out for a loss was HPQ. This one was a little bit of a nail biter today, and we could have let it go until tomorrow, but just felt like it was better to get this trade off the table. HPQ yesterday closed just under 27, and then today started to trade above 27 and eventually above 28. So we had sold the December 27.28 call spread, and we bought it back here today for 80 cents. If we did not buy this back, it would have gone to $1, so that would have added another 20 cents of loss per spread. So in this case, we lost $52 per spread. A little bit unfortunate, but again, it was kind of a nail biter. We'll go to the actual charts. You can see what I mean. Our strikes were right at where HPQ was kind of trading here the last couple of days. So you see that HPQ kind of traded and dipped below 27 yesterday, and then today started to close and trade much higher than that. So again, not taking any chances. It's 1 day to go till expiration, so we took the trade off, saved 20 cents, and move on to the next one. The next one that we closed out here today is Microsoft. Microsoft is actually a January call spread that we originally put on. This actually hasn't been on that long, but we bought back this vertical call spread, which we had sold for a nice little premium. It was the 40-42 call spread, and right now we bought it back for a debit of 7 cents. And really, for January options, you can't get better than this. And it was a nice $35 profit per spread, so very healthy profit. And this is what I always talk about in some of the video tutorials and trading alerts, is taking these nice profitable trades off the table. We're not going to stick around for another 30 days just to make 7 cents when we made $35 in a couple days. So that's the whole idea with this, is that Microsoft made a nice move, implied volatility contracted just a little bit, and I'll go to the chart here so you guys can see that. But it made a nice move lower, which is not exactly what we thought was going to happen, but it's obviously very helpful that it made that move lower. So we took that trade off on the call side. There's no point in waiting another 30 days to make 7 cents on the trade. So that's why we took that trade off. FDX, same basic concept here with FDX. It was a December option, so it expires tomorrow. We had the 40-45 call spread. We bought it back for 70 cents as far as a debit. Originally sold it for around 145 or so, so we made a nice $75 profit per spread. Again, same thing here, was kind of right on the edge. FDX was kind of knocking on the doorstep of our first strike at 140, and you can see it closed today at 139.69. So our first strike up here at 140 is only a couple pennies away. Tomorrow it can easily continue to trade higher through that strike, and it could have turned into a loss in just a single day. So again, take the money off the table. It was a nice profit that we made almost 50% of our potential profit. So very good trade. Take it off, and let's move on to the next trade next month. So hopefully these videos are always helpful. If you guys have any questions about the trades we made, please ask them below in the comments section. And as always, come back and check us out tomorrow. We'll do another video update every day with any trades that we made. Happy trading.